Welcome to Illuminati Silver. We tell the truth about silver. Today is Thursday the 17th of March 2022. And wasn't yesterday exciting? Listening to Jerome Powell, the Fed chair, as he announced a rise in interest rates. And then uttered, to expect more to come. No? Not that interesting? Not that exciting? Well, we'll take a look anyway. Okay, so what did happen yesterday? Well, the Federal Reserve raised the US Fed funds rate by 0.25%, moving it to 0.25 to 0.5%, the first rise since 2018. The signalling that came from the statement and press conference afterwards was that rates will eventually rise to 2% by the end of 2022 and 2.75% by the end of 2023, which, if accomplished, would be the highest level since 2008. Of course, not everyone believes that this will be achieved, but we shall park that thought for a moment. Now, Jerome Powell stated, quote, "As I looked around the table at today's meeting, I saw a committee that's acutely aware of the need to return the economy to price stability and determined to use our tools to do exactly that," unquote. He also indicated greater concern that higher inflation might persist due to a hot job market, with record job openings and wages up at their fastest pace in years. Now, the FOMC approved the rate increase on an 8-1 vote, with St. Louis Fed President James Bullard dissenting, not being against a rise, but actually wanting a half percentage point increase. Mr. Powell also stated that the Fed could finalize a plan to shrink its $9 trillion asset portfolio at its next meeting on May the 3rd and 4th, and to implement it shortly afterwards. The central bank ended its long-running asset purchase stimulus program last week. Now, it's important to note that Powell did not rule out the prospect of potentially raising rates by more than 0.25% in successive meetings, depending on economic data. With inflation running above 6% and the Fed having a target of 2%, one does find it difficult to see how they may actually achieve that, even if rates did reach 2% by the end of the year. Regardless of that thought for now, let's have a look at how markets have responded. Well, firstly, let's take a look at the dollar index, and we can see that although it's dipped slightly by 0.25, it's still holding quite well, above 98. Now, we have the UK announcing the potential for raising rates today, and we suspect that if they do, that may hit that index slightly, maybe pushing it just below 98. But we suspect, in view of what happened yesterday, the dollar is going to remain relatively strong. Now, equities performed well, with the Dow Jones up 1.5%, the S&P up 2.25%, and the Nasdaq up 3.75%. Asia Pacific overnight up, ranging from 3 to 7% in Hang Seng Index, but Europe generally is down. Not a lot, but this obviously has to do with the situation in Ukraine still rattling, and also, of course, the prospect of higher rates in the UK. So what happened to gold prices? Well, they're up $23 at $1,944. In the video that we produced yesterday, we stated that we probably envisage gold staying above 1920. It did actually dip below that. There was a freak fall, actually, to as low as 1895 yesterday, and then an immediate recovery. And since the announcement, we've seen gold rise. Silver, a similar situation. That's up 56 cents at 25.37. Again, a dip yesterday, and then a significant rise. Cryptocurrencies, really on the back, whatever the Nasdaq does, the crypto market generally does, and that's up 1.5%. Actually, it should be a little higher in view of what's happened to equity markets, but like other areas, the crypto market is currently in decline. However, bad news, quick look at oil, and we can see that oil is back above the $100 mark and is up $4.86 for Brent crude and $4.43 for WTI crude. So gold's recovery and advancement yesterday suggests to us that this interest rate rise was almost baked in once analysts came off their knee-jerk reaction, and also this headwind in reality is having somewhat of a minimal effect. Far more concerning is the situation in Ukraine and how that develops. And, of course, if it eventually ends peacefully, then that will undoubtedly have a dampening effect on precious metals, because the risks will have been removed somewhat. If, however, it does not end satisfactorily, then we could potentially see $2,000 gold quite quickly, and perhaps even then advancing also quite quickly to all-time highs. On the downside, there does appear to be some support at the moment at the 1890 level, and stronger support, at least for now, at $1,850. Now, the technicals for silver are a little more bearish, at least from a technical analysis point of view. We have support near the 200-day moving average of $24.06, and resistance is now the former support level near the 10-day moving average of $25.54. That does not mean, of course, that prices cannot move out of these brackets, but silver's going to find it difficult unless there is some major geopolitical incident to cause it to do so. So we're still sticking by our forecast published on the weekend in our weekly update, which we shall be updating obviously on Saturday. And as I am sure you are, we're all watching Ukraine closely. And for us on this side of the pond, we're also awaiting the Bank of England's decision on interest rates today. What do you think? Have markets responded as anticipated? Will we now see a further strengthening of gold and silver? Will the dollar index fall further? Share your thoughts. But meanwhile, if you haven't done so, please subscribe to the channel, press the bell sign so you're notified of our videos, and hopefully give us a thumbs up. Thank you for listening. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.